literally said they're growing so fast they can't find enough planes, or they can't find planes fast enough in emergencies to transport these machines from hospital to hospital. So they actually have to get into the aviation business. They've started buying their own planes. I'm up 72% year to date in the trading portfolio. I'm up 98% year to date in the investment portfolio. Everyone keeps saying higher for longer, right? Meaning rates, the Fed's going to be higher for longer, which is probably true. Mine is stronger for longer. I'm like, how are you buying the best companies with the best fundamentals and best technicals, and you're flat over 8 years? So I started my position in like May or June of 2020. So I've been in it for, I think, 40 months at this point. It was a $10 stock when I started buying it. What percentage of Americans are even going to be on Ozempic? Like, it's going to be a small number, and it's not like it's a fucking like cure-all for every disease out there. And the people that are obese, like, do you think they're going to stop eating bad food and drinking soda? Like, no, they're going to.
We were just talking about that. We were literally just talking about that. It will not fix bad habits.
No, you've been doing the same thing for 30 years. No drug is going to fix that. Like, it's only going to like get you to stop eating candy and stop drinking Coca-Cola. Bullshit.
You still need this is a prescription drug, right? It's not like a.
Oh yeah.
Yeah. Okay.
And we don't even know the side effects. Like, I've already seen some news that it might be causing stomach ulcers and like, who knows, right? So
right. Well, you always have to be kind of skeptical on a new miracle drug that's pretty much being advertised to now fix everything. Lower heart disease, you'll lose weight, fix your life, and it'll solve America's obesity problem all in one go. Everyone will just get on Ozempic and everything will be fine.
But they talk about like I forget the exact term, but Novo Nordisk and Eli Lilly, I mean, they've seen their market caps explode, but basically like every dollar that they've gained their market cap, you've seen like $2 come out of, the rest of the industry. I mean, even the hospital stocks are getting smoked because they're saying, well, people are going to be so much healthier, no one's going to have to go to the hospital. Like, come on.
That's such bullshit, man.
The orthotic companies that make like the hip replacements, knee replacements, they're getting smoked because they're saying like, well, everyone's going to lose 50 pounds. So, there's not as much stress on your knees and your hips and your ankles. Like, so people are taking this shit. Some people are saying it's going to be good for the airlines. People are going to weigh less. So the airlines are going to use less jet fuel. Like, come on.
Oh my God. They're really pinching hairs there, man.
Seriously.
Yeah.
I don't know who comes up with this. This is like analysts probably just trying to, come up with their hot takes so they get on CNBC.
Get their cool rationale. Let's watch out for colon cancer in the next 3-4 years. See what happens with this stuff, because that cannot be healthy.
No,
this cannot be healthy.
Nope.
Yeah,
I mean, I've heard, so someone, I think it was Jim Cramer, did say something that he heard it ruins the taste. So I think it's supposed to like kill your appetite. Other people are saying like it changes your taste buds or changes your desire for food, so you don't even want to eat, or food doesn't even taste good anymore. Like, I just feel like some people are like, fuck that. Like, I miss food. I just want to be fat.
Yeah.
Can you imagine going through life and not enjoying food? Like, that's kind of miserable.
Me and Josh, we're both bodybuilders, and food is like the best fucking thing in the world. Like, I mean, we eat healthy 90% of the time, but that 10%, man, just go hog wild and eat some good pizza, man.
I'm 260 pounds. I go to the gym twice a day.
Oh yeah. So you're right there with us.
Yeah, you can't really tell just because the angle of the camera. But,
back. Let's see an arm there.
I can't really tell.
Oh,
it's hard. Yeah,
beefy crew today.
Yeah,
I mean, I can do 275 for like 15 reps, 225 for like 25-30 reps if I'm going for it hard. But yeah, I mean, my entire life revolves around food. 5, 6, 7 meals a day, 30 grams of protein per meal, a lot of egg whites, a lot of chicken, a lot of beef, too much pasta, too much bread. I mean, I don't compete. If I was competing, I'd probably get on that drug just to lose some weight. But I've also heard that drug, you lose a lot of muscle mass as well.
Well, yeah. Well, that's actually, I mean, last week we had on the podcast a PhD research scientist, because we do finance professionals and health professionals. so that's the growth and gains, But so he was talking about the major issues with massive muscle loss for people who use any of these, who basically abuse a lot of these weight loss drugs. They'll just stop eating altogether. They'll lose so much muscle, and then they'll panic and freak out, like, oh, that's not quite what I was going for. Yeah,
and that's going to lead to some other health problems and injuries, and so. Right.
Yeah,
but this is the whole pendulum swings too far both directions. Right now, there's like all this panic that all the med tech companies are going to, get destroyed by Ozempic, and anyone that has the balls to go in and buy right now will probably reap those rewards over the next few years as the industry bounces back when they realize this isn't like a death blow.
Yeah. Yeah, no, 100%. Are you doing some buying in the sector then? Are you buying some of these companies that are kind of getting swatted right now, or you see them kind of?
So I had so in my investment, I mean, are we recording?
Yeah, I mean, I just you came in, okay. I was like, I'll just hit record, we'll just go.
Okay. Yeah, so I run, do you want me to kind of get into what I do?
Yeah, absolutely, sure.
Okay. So I run 2 portfolios at the same time on 2 different platforms. One is my investment portfolio, 20 to 25 stocks, mostly growth stocks that I think all of which can double over the next 3 to 4 years. So I have investment models for all my companies. Once they sort of fall below that, that 100% over the next 3 or 4 years, I start to trim back the position. So Transmedics, Shockwave, and Lantheus are 3 med tech stocks that I have in my portfolio. I was buying Shockwave heavily last year when it dipped down to 120, 130. It then rallied up to $300 this summer on takeover news. So I was, at that point, the valuation got pretty frothy. Multiple got pretty rich. So I was trimming back my position aggressively. I probably sold about 60% of my stake. Since then, the stock has pulled back 50%. So now I'm starting to add back a little bit because I still think there's a chance it gets taken out, acquired by like a Boston Scientific, an Abbott, a J&J. The other another medtech stock is Transmedics that we were talking about earlier. They created these machines, what they call OCS units. It's organ care system, and that's to help with organ transportation. So they take a heart, lungs, liver out of the donor. Donor dies. They harvest it, put it into these machines. These machines pump those organs with blood and nutrients until they can transport it to the recipient. So you're keeping these organs alive for longer, you're keeping them in better shape. So by the time the recipient gets it, they have a better chance of accepting that organ and having a successful transplant. Same thing though. I got into that stock last summer when it was in the 20s. It rallied up to 99 this summer, but they're also growing like 150% year over year. So very high growth company, expanding globally. They just got into the aviation business because they literally said they're growing so fast, they can't find enough planes, or they can't find planes fast enough in emergencies to transport these machines from hospital to hospital. So they actually had to get into the aviation business. They've started buying their own planes. And the stock took a hit because that's obviously some, they're going to have to spend $50 to $100 million over the next couple of years building out this fleet of planes. But they said it's basically to enable their growth over the next decade. They think they can 5x revenues over the next 6, 7, 8, 9 years. So that stock went from 20s last summer to 99 this summer. I didn't see 100% upside over the next 3 or 4 years. Trim back my position. I think I trimmed it back from about 6% exposure to 3%. Now the stock pulled back 50%. So now I start adding back some of those shares. So it's like, I still have my core positions. I just sort of trade around them. Sometimes I'll sell a position completely, like Crocs. I sold out of Crocs completely, I don't know, a month and a half ago. And now I'm worried, like this company Temu, which is the US version of Pinduoduo. So they did a big Super Bowl ad and they're making a pretty hard push in the US. So Temu, it's all like knockoffs. So if you go on to Temu and search for Crocs, you see these like total knockoff of Crocs selling for $8, $9, $10 being manufactured somewhere in China. Like that makes me nervous. Like Crocs are pretty easy to knock off. It's a $30, $40, $50 shoe. Like I am worried that if Temu starts to, keeps growing in the US, like they could lose some of their market share to Temu, because there's probably a lot of 20 and 30-year-olds out there that would rather buy a $8 pair of Crocs from China than a $50 pair of Crocs from their, their local Crocs store. So
there's no brand loyalty there.
I mean, I don't know. I don't know if they've really been tested yet. I know there's been knockoff attempts over the years. I think Crocs was good at suing them and getting them out of the market. I just don't know if they can do the same thing with this big Chinese company. I mean, we all know that Chinese companies don't play by our rules, but we have to play by theirs. So, if Crocs tried doing this in China, they'd be banned. Just like Twitter's banned, Google's banned, Facebook's banned, but we allow TikTok to come over here and, do whatever the hell they want. So,
might have been, or I was going to say, it might have been Doomberg or one of those guys that mentioned China doesn't play by economics, they play by politics.
Yeah. Yep. I mean, they know that we need them, maybe more than they need us. So, because we rely on those cheap products, we import a lot of their crap. We need their manufacturing. So it's not like we can just cut them off for as much as I wish we could. So that portfolio, so that's 20 to 25 stocks. That's where I have a big position in Celsius. That's my biggest holding, has been for the last few years. Super Micro, Uber, and then I run a trading portfolio, which is anywhere from no stocks. I was 100% cash a week ago to 20, 25 stocks, which is what I have right now. And that's where I'm typically buying, it's all technicals, price, momentum, volume, relative strength. So two very different strategies. I like running two different strategies. It kind of lets my, because like I do like digging into companies and trying to find stocks that can, like I said, grow 100, 200% over the next 3, 4, 5 years. But that also requires a lot of patience. And I'm typically adding on pullbacks versus my trading portfolio. I'm very aggressive with my stops. So, I mean, in my trading portfolio, I'm typically buying breakouts. So breakouts above previous highs, pivots, stocks reclaiming their 200-day, 50-day, 21-day. Like right now, there's a lot of stocks that are starting to push back through their VWAPs from their summer highs. That's a good time to typically get in. So that's where I'll start a half position, and then I'll turn it into a full position once it breaks out above those summer highs.
So you sound like mostly like a fundamental guy, though. When you're doing in your trading account, is that like 70% fundamental, 30% technical, or what do you?
I mean, it's 100% technicals, but it's all based on stocks with good fundamentals. So every day I wake up, I do my screeners. I run 3, 4, 5 different screeners. I'm looking for stocks that have growing revenues, growing earnings. So like one of the screens I do is market cap above 500 million, stock above $5, above their 20, 50, 200 day, and earnings acceleration for the 2 last quarters. So that's one scan. A couple weeks ago when the markets were, or even last week, it was like last Wednesday, the market was, the S&P was getting ready to touch the 200-day moving average. I think I was getting 30 or 40 results on that scan in the morning. And this morning I got like 112 results. So, there's a lot more setups right now than there was a week ago. A lot of stocks have bounced off their lows and reclaimed some important moving averages. So I'm trading stocks that have good fundamentals, but at the end of the day, it's all about the technicals. Like today I got into Shopify. Got into Shopify a couple in my trading portfolio. I think it was last week when it bounced off the 200-day or reclaimed the 200-day SMA. And then today it reclaimed the 200 EMA in the morning, but it couldn't hold that level. So I moved up my stop loss and got stopped out below the 200 EMA just to lock in, it's a small gain, but just to lock in some gains ahead of CPI tomorrow. Like, I don't want to take the risk that we get a big gap down and, like I'm up 72% year to date in the trading portfolio. I'm up 98% year to date in the investment portfolio. Like, I'm not trying to screw myself in the next 2.5 months of the year. So like my investment portfolio, I'm technically 100% long, but I'm like 35 or 40% hedged. So like, I'm just not looking, I don't want to blow up my portfolio the last 2.5 months. I want to make sure I don't mind missing some of the upside. I just don't want to take too much downside.
Yeah, I mean, you've already had fantastic performance. I mean, that's really good. Yeah.
I mean, I've made plenty of mistakes. When Celsius was So back in March, I think it was March. Yeah, early March, before they reported their Q4 numbers, I think it was, the stock got down to $81. I mean, I was buying, but then the stock rallied 150% over the last 7 months. From a blowout Q4, blowout Q1, blowout Q2, stock went from $81 to $206 in like late August, early September. Like, I still love the company. I love the potential for the next few years. They have Pepsi as their distributor. They're like just getting ready to go international. Monster's a $60 billion company. Red Bull's an $80 billion company. Like, there's still a ton of runway left, but I'm mad at myself for not doing a little bit more trimming in the 200s, because then the stock pulled back 25%. So, like I've made some, sometimes you get a little, like in your investment portfolio, you sort of get used to thinking longer term, and it's hard to trim some of your winners because you also don't like paying taxes. So, like that portfolio is meant to be long-term thinking, tax efficient, like try to minimize the taxes. If you sell a position and start paying taxes, like that stock needs to pull back at least 25-30% to make it, to justify paying the taxes on it. And sometimes you trim, it only pulls back 10%. And then it's like, then you're chasing it higher again to get back to your regular position. So,
yeah, no, that's a great point.
I mean, like where I did well. So, I mean, I rode so growth stocks did well for the first half of the year. I was in some of the biggest winners. Wasn't in Meta, wasn't in Nvidia, ironically. So I still did pretty well without those two stocks in there. I actually bought them both at the lows in October, but then sold them before year end. Like, stupid. But
that's
Kathy Woods
something
did the
I
same.
hear
It's
a lot.
okay.
Yeah.
What's that?
Yeah. I mean, there's a lot of people who did that. He said Kathy Woods did it as well, so it's okay.
Yeah,
she sold before the big rally.
At the lows.
Yeah.
Yeah, but I did. I took a big position in Meta right near the lows and bought some call options. So I crushed it with that at the end of last year, which turned. So last year was actually decent. Like I was up 180% in 2020. I was up, I think, 90% in 2021, and I was only down like 13% last year. So for a growth investor, like I've held up, I've done pretty well in the downturns, mostly because I use hedges. Like when, if I'm fully invested and things are falling apart and the indexes are failing to hold certain levels, like I'm adding the hedges pretty aggressively. So in July, when I was up, I think I was up 90 or 95% near the highs in July. As the indexes started to pull back, I started to add hedges. So I was 30, 40, 50% short ARKK, RSP, IWM, IWO, FFTY. So as the markets pull back, some of my stocks pull back, it didn't hurt me too bad. I think I peaked at 106% year to date, I think end of August when Celsius was at 206. And then I got down to about 91%. So I gave back about 15 points, but it's not too bad.
No, it's
how do you typically
fantastic.
hedge? Do you buy put sell calls, or what's your hedge strategy? Just that's not proprietary.
Shorting shorting different index ETFs.
Yeah.
Okay.
So, I mean, my favorite hedge is just shorting ARK.
Yeah, because you're mostly a grow, so that makes sense.
Yeah, I mean, that's the problem. Like there's a lot more beta in my portfolio than IWM or IWO. So if I'm having a bad day and I'm 30-40% short IWM, IWO, it may not give me the cushion I want, the hedge that I really want, versus ARK usually does. ARK has a lot of beta to it as well. But I just don't screw around with options, partly because I run a couple investment services. And like some of my subscribers, like they probably shouldn't be touching options. So I'm just afraid if I'm doing options and they're trying to follow me or copy me, they're just going to screw themselves up pretty bad. Versus like it's pretty easy to short the indexes or the ETFs, or nowadays there's an inverse ETF for everything, right? I mean, if you don't want to short ARK or you don't have a margin account, you just buy SARK.
I'm not familiar with
Yeah,
SARK.
I feel like
that's the inverse.
SARK is the inverse of ARKK.
Okay.
So if you don't want to short it, like I said, you don't have a margin account to do so, you just buy SARK, and it gives you like the exact inverse of ARK.
I didn't even know that existed. All right.
Yeah. Oh yeah. I mean, there's everything. Like today, Google broke out. Like instead of buying GOOG, I bought GGLL, which is the 1.5 leveraged version of Google. So there's like a 1.5 2 leveraged ETF for everything, like all the big stocks. So Tesla, Nvidia, all the FANG stocks. Like if you're a trader, you're looking for a little bit more juice on breakouts. That's why I buy the 1.5 or the 2x ETFs instead.
I didn't realize those existed. That's actually an interesting strategy because it gives you that exposure that options traders look for without the time sensitivity to it. So that, that can be a great alternative to people, that like your subscribers shouldn't be touching options.
Yeah. Especially if you're buying breakouts. I mean, like I mean, several people have tried to talk me into doing options. I just don't have a lot of experience with options. I mean, I guess like if I'm buying breakouts and the breakouts are all working well, then I guess theoretically, if I was buying options as the underlying stock was breaking out, I'd probably do well as well or better. But like that's just adding like another layer of complication to my strategy, and I'm just not sure I'm ready to go down that path.
Yeah, I find that all the time. So for context, I'm the trader. I'm doing tons of options trading, and Monty is the analyst. So we have that's our duo. I'm the big options.
So the other thing
expert.
with options is like, I mean, I when I run my scans in the morning, I'm typically looking for stocks that average about 400,000 shares a day. So like that's decent volume. That usually gets you like a relatively tight bid-ask spread, like nothing crazy wide. Like that's my concern. If you're trading options, like you really have to stick to just the biggest so that you have the volume, right? Like if I'm trying to buy Celsius on a breakout, like there's really no options volume. Like that's going to be hard. I mean, you're going to have a pretty wide bid-ask spread on any of those contracts.
Yeah.
No, absolutely. I kind of shot myself in the foot about a month or two ago buying a couple options contract on. It's a well-traded stock, but the options market for it's just so dry. I didn't check the open interest and check all the stuff that Josh is more familiar with. And you get the price action, but you don't get the actual. It's not reflected in the options price just because the market's so illiquid for them.
I mean, when you see guys on Twitter and they're always posting their option plays for the day, I mean, it's always the big stocks. It's Tesla, Meta, Nvidia, AMD. Like it's the stocks that have the most volume, which I assume means they probably have the most options volume as well. You can get some pretty tight bid-ask spreads. So, I mean, there's sometimes like when something like in my investment portfolio, if some of my stocks start to get washed out, like Transmedics, for instance, right? Transmedics is down 13 to 14% today. It's down 55%, I think, over the last few months. I mean, I'm adding to my long-term equity position, but I feel like it's sort of washed out right now. This is where I'd consider buying some options as well. When Celsius got down to $81 back in March, I was adding to my equity position, but I also started buying some options as well. So like that's typically when I use options is when I feel like the market's getting really oversold. That put to call ratio is really high. Like I track which, the sectors and indexes, like what percent of stocks are below their 20-day, 50-day, 100-day, 200-day. And last week, I think last Wednesday, I mean, you had like, it was like only 8 or 9% of the S&P stocks were above their 50-day moving average. Like that's historically low. Like that's a good sign that we're about to bounce. Like this market's oversold, things are washed out. So, I mean, that would have been a good time to start buying some options. I probably should have. I pansied out.
Yeah, I cut out there for a second, but kind of a follow-on tech on question to that. Where do you see the market going, over the duration of the year or first half 24? I keep seeing that, a couple months ago, analysts were saying first half 24 is going to be the doomsday, beginning of the end. Now I'm seeing GDPs being revised up and, things aren't as bad as we anticipated. Like, what are you thinking?
So everyone keeps saying higher for longer, right? Meaning rates, the Fed's going to be higher for longer, which is probably true. Mine is stronger for longer. Like the economy is holding up stronger for longer. Like you said, GDPs is still in like the fours. We're still adding now. I don't know if everyone trusts the BLS jobs report last Friday, but if we really added like 336,000 jobs, like I don't think it's totally legit. It might get revised lower, but like the labor market's still fine. Most of my friends have jobs right now. Like you still see some help wanted signs around. And then you got the JOLTS number last week or the week before. Like there's actually more job openings now than the month prior. So companies are still out there hiring. Maybe like, I don't know, like I try to figure out why exactly. Like you would think if companies were buckling down for a recession, you would not see an increase in job openings. So that makes me think that like business owners, entrepreneurs, like they must feel pretty good about the economy right now and their own financial situation. I know credit card debt is at historic highs. I know savings rates are coming down. Student loan payments are about to start up again. Mortgage rates are at 8%. Like there's plenty of reasons to be bearish or cautious. Valuations are not cheap. They're not like crazy expensive. Like there's definitely some stocks out there that I think are attractive. And I do think the Fed is done. I do think that by the yield curve moving higher, or at least the long end of the yield curve moving up over the past couple months, it's basically done the Fed's job for it. So, the 10-year has gone from 3.2% in March to, it was 4.88% on Friday morning after the jobs report. That is a massive move. That is restrictive in itself. And then just since the last FOMC meeting in July, well, I guess you had September too, but since July, it's probably up 50, 60 basis points, the 10-year. So that's like 2 rate hikes right there. So I just don't think and now you have Israel and Hamas. Like, I just don't think the Fed's going to go in November or December. So they're probably done. It's just, when do they cut? And do we, like, if they're cutting? So this is what I think is ass backwards. Like the market, like my buddy asked me to explain what's going on right now in the economy. And I tried to explain that stocks were moving lower last week because everyone was afraid that the FOMC was going to keep hiking, slow down the economy, and that stocks needed, rate cuts. But it's like, if the Fed is not cutting rates, it's because the economy is strong. If the economy is strong, companies are increasing revenues, increasing earnings, increasing buybacks, increasing dividends. Like that's all good for stocks and shareholders. Like the market just keeps waiting and begging for rate cuts. But like, what if you don't need, what if we can absorb or withstand, I don't know, 5% short term. Now, I guess that's where it gets that has to change. Like if the 10-year is going to stick at 450, then you're going to have to see the short end of the curve come down. So like that inversion, I'm not sure how long that can last. Like that
I was going to say what's going to remediate first, the long end or the short end, because if one goes before the other, that's how we're kind of in a shaky space, I imagine.
This is where it gets tricky. Like if the Fed doesn't cut in November, or if they stay on pause in November, they stay in pause in December. So that means Fed funds, I think, is at 5.5 still. And let's say the 10-year is still in the mid fours. If CPI and PPI are still coming down, like I don't know how long. Like even if the economy, as long as inflation keeps coming down, and the problem is it's not going to. Like I'm not one of these guys that thinks it's going to spike up. It's just where we were at the end of last year, month over month, and the beginning of this year, month over month. We were in that 0.1, 0.2% month over month. So if we just keep doing 0.1, 0.2% month over month for the next 6 months, we're just not going to make any headway. Like the headline CPI is basically just going to stay where it is, which isn't horrible, but like the idea of getting down to 2% isn't going to happen. Because like in order to get to 2%, we would need to do 0.1% or less for the next like 6 or 7 months to even get close to 2%. So I think we're going to be stuck around 3% for a while, because I just think we're going to keep printing these 0.2% month over month numbers, unless oil crashed, unless like shelter crash. I just don't, wage inflation crash. I don't think that's going to happen. So I don't know, like, is the Fed going to change their tune and say, okay, now the target is 2.5 or 3, and if we get to 3, then they can start cutting, even though the economy hasn't weakened yet. Maybe they just don't want such an inverted yield curve. Like I don't know. Like it would seem crazy if we get inflation down to 3% and Fed funds is still 5.5. Like that seems like you're trying to force a hard landing versus like, let's try to navigate for a soft landing if possible. So let's do a couple cuts here just to make sure we don't, throw the economy into a recession if it's not necessary. So it's weird times. I mean,
what do you think of the people who are proclaiming that we're already in a recession and that a hard landing is already like foregone?
I think they probably missed the upside the past 9 months and they're praying for a pullback so they can get long again.
They're just a little salty on it.
Yeah. When you go on Twitter, like, if you're watching CNBC Fast Money, at 5:00 and, Dan Nathan, Guy Adami, both seem like great guys. They've been bearish all year long. Like, I'm assuming they really haven't had much equity exposure the whole year. So they've missed it, like, yes, I'm having a great year. If I had listened to the bears all year long and like, listen, I came into this year like sort of pessimistic, thinking like, I think SPX could go down and test, 3,200, 3,400, but like, I'm not going to make that bet. So like, I'm going to have some equity exposure. And if things start to roll over, I'll just get hedged. And thankfully, we didn't go down there and it was a pretty good year for me. If you were in the right stocks, like there are plenty of stocks that have not done well this year. I mean, look at the Russell 2000. It's basically, where is it, flat on the year still? So the Russell 2000, it's up 1% on the year. Like, so,
yeah.
If you're an index investor, I mean, you've done well in the Qs, but, if the Qs are like 20% of your portfolio, and then you have like ARK, SPY, the Russell, like, yeah, I mean, you're probably up like 10, 11, 12% on the year. That's decent. But if you were in Celsius, Uber, the FANG stocks, NVIDIA, like some of these AI names, like you've had a really, really good year. So I don't know. I mean, I don't know where the markets are going. I was kind of hoping last week we would bounce off 4,200 or the 200 day, just to say that we got there, touched it, tested it, and now we can move higher. I just think a lot is hinged on CPI tomorrow, FOMC in November, and then earnings season. Like the banks start, we got Pepsi yesterday. It's not really like a bellwether company, in my opinion. Yes, they have some organic growth, but it's price increases, not volume growth. But the banks will be interesting on Thursday and Friday. I don't know if bank earnings are bad. I don't know if that's enough to sell off the market, or if people will just look past it and look towards the FANG stocks. I think Netflix is next week. So
yeah,
I don't know.
I'm curious to see, especially CPI. I'm just rolling off of a big deal on researching petrochemicals, but they've been on a down cycle for the year and potentially early next year. And if we see an upswing in that in relation to gas and oil prices as they elevate, that could be a big hit to CPI potentially, or PPI.
I know the Fed says they're more focused on core inflation, core CPI, but the consumer's not. The consumer, I mean, they feel headline, food.
We're not buying washing machines every day.
Right, exactly. So, last summer when oil, I remember I was in Nashville, Tennessee last summer, walking by a gas station, seeing like, $6 a gallon, and it was like $8 or $9 in California. That's what's hitting the consumer. That's when they have to start changing their purchasing behavior, because they're spending so much more money at the gas pump, that now they can't go out to eat, 3 times a week, and, they can't buy the extra pair of sneakers because they're putting it into their damn car. So, if gas prices do go up, that's when you start to see a pullback from the consumer. So, I mean, I think we're fine. Yeah, I mean, we're in the mid 80s again. Like, I think that's fine. I think if we stay in the mid 80s, I think headline CPI should be all right. It's not like the Ukraine-Russia war, where such a large part of the world's food supply, wheat and whatnot, comes out of Ukraine. You know,
it's like 25%. It's huge.
It's crazy. And a lot of other stuff too. You know, that causes
fertilizers,
in supply chains. Like, I don't know what Israel is really known for, but I mean, and I don't think it's a big. I mean, Iran's a big oil producing nation, I believe. So if there was some sort of like an escalation, World War III, and the U.S. had to get involved, or the U.S. puts some sort of like embargo on Iranian oil, like maybe that spikes it up, but I don't know.
The theory goes, and this includes Russia as well with the embargo. I mean, I don't think either of them would stop selling to China. You know,
no,
you wouldn't necessarily lose the barrels, just different buyers.
Plenty of countries are still going to buy. It just won't be us.
Oh yeah, India, they're a huge buyer of Russian oil ever since the embargo was placed. It's like, you know, it never really impacted them essentially. It's insane.
Yeah, so, I mean that I would say I'm more nervous, like right now I'm more nervous about geopolitical stuff. Like I'm less nervous about, because I can see inflation's coming down. I can see the FOMC is probably done. I can see earnings are fine. Like if GDP is growing 4 to 5%, then corporate earnings should be just fine. Margins should be fine, you know, because freight costs have come down, oil's come down. So like, I don't think there's going to be any big blow-ups with Q3. I'm just worried about escalation in the Israel situation, or China going over to Taiwan, or, you know, God knows what else happens.
Yeah.
Oh, so even just blockading the South China Sea, that would be so detrimental. Even if they don't invade Taiwan directly, but just blockade the shipping channel, it's like there goes our semiconductor supply, there goes pretty much our entire technology space right there.
And this is where, like, I mean, so I'm like, I think I'm 65% net invested right now in my investment portfolio. Like, I'm wondering if that's even too high. You know, after having a good year, we're into Q3, right before earnings. Like, I'm thinking I should probably be even more hedged than that. And I mean, the reason, like, I don't like selling stocks. I don't like raising cash because it triggers taxes.
Yeah.
So that's why I try to use hedges instead. There's not a perfect hedge. So that's why I just, you know, I use ARKK, FFTY, which is the IBD 50 ETF. And there's actually like a decent correlation between that and my portfolio. What's funny is, like, this was fucking crazy. So FFTY, the IBD 50, they call it like the IBD 50 Innovator ETF. And they're buying stocks that have like strong fundamentals, strong technicals. The fucking thing is, it's been flat for the last 7 years. Like, it's like 60, 70, 80% off the highs. It's back to where it was in like 2016. I'm like, how are you buying the best companies with the best fundamentals and best technicals, and you're flat over 8 years? Like, I think what they do is they chase the stocks at their highs, and then they get stopped out maybe 10, 15% lower, and then rinse and repeat, and just keep chasing stocks at their all-time highs.
So they're just retail traders at this point.
It's like, I mean, the last time I looked, like a month ago, like 3 of their top holdings were Celsius, Supermicro, and ELF, and all 3 stocks are up like 150% over the last year. So like, how are those 3 of your top 10 holdings, and yet your ETF is basically flat over the last year? Like, you must be chasing these at their all-time highs. That's all I can imagine.
Yeah. So let me ask you, when about the software you're using when you're doing those scans. What are you using?
So for scans, so I use 2. I use Deep View, which is the guys behind Trader Lion. They launched Deep View 3 or 4 months ago, maybe longer than that, maybe 6 months ago. They've done a great job with it, and you can get like very, very detailed on your scans. I mean, it's like overwhelming how many different options there is for everything. Like, it's and then you can save your scans. So I have 3 scans set up in there. So I go there every morning, run my scans, and then FinViz is the other one.
Okay.
So I use both those 2. I mean, there's a lot of overlap, but I use both, knowing there's gonna be a lot of overlap, just to make sure I'm not missing something. And then I take all of those stocks, all of the results, put it into a trend spider watch list, and then go through every single chart. So this morning there was probably 150 from all 50 from all 5 scans, probably about 150 results. Obviously a ton of overlap between the scans. And then I go through 150 charts, and I picked this morning, I found 34 setups that I really liked. So those 34 setups go into my primary watch list, and then all of that goes in my morning newsletter. So I send out a newsletter every morning, takes me about 3 hours to put together, and it's all my scans, all the results, and then it's, all the macro stuff, all the indexes, and then it's my watch list with all of my charts and my entry points and exits and all of that. So that's what my subscribers get. And then during the day, like any trading I do is going to be like 90% of the stocks. If I take any positions, it will be from that watch list, because I've done all the homework. I trust myself, and I would say, like, I'm buying stocks that break out. Like if I have 34 stocks in that watch list today, like we did see some big fades off the morning highs, but at one point this morning, like I think over 20 of them had broken out.
Yeah.
And for those listening, that's Deep View, DEEPVUE, in case you want to check it out.
Oh, yeah, thanks for mentioning that.
Yeah. So it's a lot of work, and literally every day it starts all over again.
Yeah.
So like tomorrow's a new day, new scans, new lists.
Well, you're doing, I saw 6 to 8 deep dives on Substack for both mid, small caps and large caps. You have a podcast you do as well. You have a 3-hour morning routine where you're going through these scans and stuff, and you're working out twice a day.
And
so when do you sleep, man?
I started DJing.
Oh, you started DJing.
Yeah,
so how many Celsius energy drinks are you drinking a day?
See all my DJ.
Their earnings depend solely on you.
Yeah.
Celsius isn't growing triple digits without me. That's I'm their best customer. I drink actually this is a Celsius right now in a glass.
Nice.
Oh man. I'm about to convert from coffee to Celsius.
So your schedule is, how stringent are you on like, this is my morning routine, this is, it must be like very calculated to be able to fit all that.
I usually get up at like 4:35 in the morning.
Okay.
Or it depends. Like I usually go to the gym. So I try to go to the gym every morning I'll either go like an hour and a half before the market opens, or I'll wait for the market to open. Most of my trading is done in the first hour of the day, and then I'll go to the gym after that, which is actually nicer because that's when the gym is dead. Like everyone else goes to the gym early in the morning and late in the afternoon. Nobody actually goes like late morning. So that's actually my preferred method right now. And I'll bring my laptop to the gym. So if anything's happening, but I'll have all my stop losses set. And like I said, like most of the breakouts are happening first thing in the morning in the first 30 to 45 minutes. Once in a while, I'll put on a trade middle of the day. If I get if you get like one of those midday breakouts, and sometimes at the end of the day, like if I see a stock that it reclaimed the 200-day moving average or reclaimed the 50 or the VWAP, but I don't want to chase it and then look like an idiot as it fades. I'll wait until like 350, 355. And if it looks like it's going to close above that level, I'll just start a small position just to get in there and start testing it. But yeah, I have a pretty strict schedule. Because like you said, so I run a few different services, the Substacks, those are the deep dives. So I send out a weekly deep dive on a different company. I've done over 100 companies over the last couple of years. And I do split them up between stocks under 10 billion and stocks over 10 billion. So so the last small cap I did, and I'm not always like super bullish in all of them. Like if you're doing a stock every month and you've already done 100 of them, like it's harder to find stocks that you're bullish about. And I only have 20 stocks in my portfolio. So obviously I don't own a lot of these stocks, but I need to, for my investment portfolio, it forces me to keep digging into new companies, learning about them, building models, reading research, and trying to figure out if there's an opportunity there for me and my subscribers. So the last stock I did was Fastly, ticker's FSLY. I owned the stock back in 2020 from like 25 up to 120, sold it around 120, and the stock's fallen like 85% since then. So it's now trading at $15. If you look at all the other software companies from Snowflake to Cloudflare to Atlassian to CRM, Fastly looks really cheap. Now they're not profitable yet. They're only growing 15 or 20%, but it's pretty cheap compared to most software cloud stocks. And it's certainly an acquisition target. It has a market cap of like $2 or $3 billion. So, I mean, I don't love it. Like I was pretty clear to my subscribers, like I'm doing this write-up because I think there's potential here, but I don't own it. Management has been a disaster. They finally brought in the new CEO. Stock's down 90%. They've lost some of their biggest customers to their competitors, but maybe the stock maybe it's fallen too far. Like maybe it, the investors are they're thinking about what's happened over the last 2 years and not about what might happen over the next two, if they can right the ship with the new CEO. And then the large cap deep dive I'm doing this weekend is Live Nation. So Live Nation they own a lot of concert venues. They also have like an artist booking group. So if you're one of these big DJs that wants to go on tour, like you go to Live Nation, and Live Nation helps you put together that tour because they have all the connections or they own the venues that you're actually performing in. So like in Boston, they actually own a bunch of the biggest concert venues in Boston. So it's a pretty cool company. Like I don't own it. I'm not like super bullish on it. Growth is decent, but nothing special. But it's an interesting.
I was about to ask if your DJing is going to affect your recommendation.
Oh shit, that's yeah. I don't know if I'm ever going to get big enough to need Live Nation to book me a tour.
You never know.
It's crazy how much some of these big DJs make. Like everyone talks about these NBA players, NFL players, Major League Baseball players, soccer players that are making 40, 50, 60 million a year. Guess what? The biggest DJs and the biggest artists make 40, 50, 60 million a year.
Yeah.
So do the biggest CEOs. Like that's, when you're like top 10 in your industry, like that's your going rate, CEO, musical artist, DJ, pro sports player, 40, 50, 60 million is where you are. It's bonkers.
So when I was picking an instrument growing up, I went wrong with getting the drums. I should just went straight to DJing and music, missed opportunity.
And I've only been doing it for a year, but what I've learned is like DJing by itself is never going to get you big. It's all about the production. Like you actually have to produce your own songs, get your tracks out there, get the big DJs playing your tracks, which then gets you noticed and gets you gigs and fans and all of that. Because at the end of the day, like if you're just a DJ and you don't have a big following, like no venue's going to bring you in if you can't bring people with you, or if there's like no big, you don't have like your own strong selling point, like you've actually produced your own songs. So that's where you should start. Like it's not even worth your time DJing at venues unless you're like producing on the side.
Oh yeah, no, I see my buddy Cam. I'll give Cam a shout out. He's a phenomenal DJ, but just all the gear he's buying too for his shows. I mean, he has lights, he has smokestacks, he has the full venue in his setup. It's like, man.
And it's, I mean, this setup behind me, that's probably like maybe a $6,000 setup behind me.
It ain't cheap.
Good. But like the next step up is the CDJ 3000s with the I think it's AJM mixer or DG. There's two different versions. That's like a $13,000 or $14,000 setup, not including speakers, wires, or anything else. Like, like these little, each one of these like little boxes is $3,000 each. So if you get, if you want 4 channels plus the mixer, you're looking at $15,000 right there, not including all the other stuff you need to make it work. So yeah, it can get pretty expensive.
I do want to ask, kind of backtrack a little bit when you were talking about CEOs and Fastly's new CEO. When you're doing this research on these companies, how much are you looking into the background of these CEOs to see like their track record? Do you put a lot of emphasis in that, or is that something?
A little bit. It depends on the company, and whether they're a founder, whether they're a new CEO. So like, for instance, one of my positions is Unity. The reason I'm in Unity is mostly because I think it's a good way to play the emergence or hopefully what will be the emergence of the Apple Vision Pro, the AR VR glasses, and then Meta has their Quest glasses, and Unity is one of the platforms needed. So for developers to build apps and games for these AR VR glasses. So if there wasn't going to be an Apple Vision Pro, I don't think I would have a Unity position. Otherwise, it's really just a gaming company. And this week they announced that the CEO was leaving the company. He was basically forced out by the board, and they're bringing in the former CEO of Red Hat, who I don't really know. Like, I've never done any work on him. So if I was doing a write-up on Unity or something like an update for my subscribers, I'd probably have to dig in a little bit to his background. But I mean, I know that he sold the company to IBM for like $30 or $35 billion. So he must have done something right.
Yeah.
I'm seeing that's interesting you mentioned that, because Red Hat was they were bought by Oracle a few years ago, right? Or one of those
I think
guys.
I think it was IBM.
It was IBM. That's right. Sorry, IBM. And I just pulled them up on Seeking Alpha Unity, and there's a headline from yesterday that AppLovin may revisit a bid for Unity. So, he might be coming in to set them up for an acquisition target.
AppLovin talked about buying Unity a year ago, and then Unity went out and bought IronSource, which is sort of an overlap to AppLovin. So AppLovin walked away from what might have been a deal. But AppLovin and Unity basically have the same market cap. So I don't know, that always gives me pause. Like, if you're a $14 billion company, how much of a premium are you going to pay for Unity? Or is it going to be more of a merger?
Mm-hmm.
And if it's really a merger, then why? That's not exciting for shareholders.
Yeah.
Like, if I own Unity stock, I want someone big coming in there and paying a 30-40% premium. Otherwise, stay out of my way.
Yeah.
Oh yeah. You're just betting on synergy and, cost cutting and growth at that point, as opposed to, that quick turnaround premium right there.
So, I mean, there are times when the CEO is important, his background is important. There's other times when it's irrelevant. Like, take, for instance, Celsius. Celsius is my biggest position. It's been my biggest winner over the last few years. The stock's up 1,500% over the last 3 years. The CEO, John Fieldly, he was the CFO before that. He didn't start the company. He was just a numbers guy, the CFO. The CEO, this guy, Jerry David, retired from the company. Celsius was basically a penny stock. And John went out there and his team went out there and crushed it and got Celsius into stores, and then got Anheuser-Busch as their distributor, and then got Pepsi as their distributor. And they've grown sales over the last 3 or 4 years from 150 million to 1.3 billion.
Wow.
He was a numbers dude. He was the CFO. What sort of pedigree does he have, right? Nothing. Who would have thought that this guy would have, pulled that off? So, it's more about the product, the industry, the sales and marketing strategy. With a company like that, it's about everything other than the CEO. In that case, the CEO just don't screw it up.
Yeah, I see them in cases at Costco. I might have to pick one up
they
next
crush it
week.
in Costco. Yeah, Costco, Sam's, BJ's.
Celsius should have been one that I did not miss, because literally everyone in my family had, the instant they became a thing, were buying them in bulk. And it still didn't even occur to me until I actually saw you post about it.
So I did.
If I had to find you first, you had been talking about it, but
yeah, I've been talking about it since. So I started my position in May or June of 2020. So I've been in it for, I think, 40 months at this point. It was a $10 stock when I started buying it. I did an hour-long podcast interview on last Saturday, talking nothing, all about Celsius and how the company, where it was 3.5 years ago when I first invested, where it is today. Like I said, back when I invested in the company in May or June of 2020, they were expected to do 300 million of revenues this year. They'll do 1.3 billion. And back when I invested, they were expected to do 400 million in 2024. They'll do 2 billion next year. So like they're literally going to beat the estimates by 5x from just a couple years ago. So just a wild story. I mean, obviously the distributors have played a big role in it, but it's the product. Like I literally have a Celsius with breakfast because it's a light, refreshing, fruity flavor, grape, apple, cranberry, tropical vibe, whatever. Like it's not overpowering. And like, who in the hell drinks a Red Bull or Bang or a Monster with breakfast? Like nobody. So, I mean, they've
not since high school.
Right. I mean, like unless you're getting ready to go like a fucking rave at 8 o'clock in the morning. And then females, like Celsius, 50% of their consumer base is female versus it's like 20% for the other energy drink companies. So they've really transformed people's habits and how they look at an energy drink. And the CEO of Celsius doesn't even call it an energy drink. He calls it a functional beverage because it has the minerals, the vitamins. It has the caffeine, of course, but it also has guarana, green tea. So it's a healthier alternative to Red Bull, Monster, and the entire energy drink category. So it's $85 billion a year right now, growing at 8 or 9%. So it'll double over the next 8 or 9 years. So in 2033, I mean, you're looking at like 170, $180 billion industry. 50% of that is what goes to the energy drink companies because they've right, they're making it for $1, selling it for $2, or selling it for $1 to the retailers. The retailers are marking it up to $2. So, you got to cut that in half. And that's sort of like the gross revenues to the energy drink companies. So let's call that $85 billion in 10 years, 8 to 10 years. I think Celsius could have 10% market share of the global energy drink industry. Monster is at almost 20% right now. So I think Monster and Red Bull are going to continue losing market share to Celsius, to Ghost, to some of the other emerging brands out there. C4, Alani Nu.
What do you follow? Like the Logan Paul brothers and Prime, or
Prime?
Yeah.
So I mean, a little bit.
It's I will say it is a garbage product when it comes to the actual it comes to the ingredients, but the growth in the marketing seems to be working.
The growth is insane. So I mean, the hydration product was their first main product, to compete with Gatorade, Powerade, Body Armor. I think it tastes horrible. I think it tastes too sweet. It tastes very chemically, but the kids love it. The teens and the college kids freaking love it. And they're growing like 200 or 300% year over year. So they're absolutely crushing it. I haven't seen the numbers on their energy drink brand yet. I assume it's probably doing well. It's probably hitting the same demographic as the hydration drink is. But once again, like any emerging brands out there are less of a threat to Celsius and more of a threat to Red Bull, Monster. Like, I just think all of them just take market share from Red Bull and Monster. Like, I don't think Celsius is going to lose market share to Ghost or Prime, but I think Red Bull and Monster will.
Okay. So I mean, it's not an or, it's an and then.
Right. Yeah. Right. But I mean, so this sort of gets me into like, where does Celsius find, like, where's their next stage of growth? I mean, it's going to be international. Like right now, 4.5% of their total sales is international. Monster and Red Bull are like 40 to 50%. So there's a ton of growth potential overseas for Celsius, but then they have to start expanding their product catalog. So right now it's just energy drinks, plus they have these powder sticks. But I do hope that they get into the hydration category because it's obviously a pretty big one. Hydration drink, but also like an intra workout drink, like a Gatorade, a Powerade, a Prime that you would drink during your workout. The only challenge to that is Gatorade is a Pepsi product. And right now Celsius is in Pepsi coolers because of their distribution deal. And if they came out with their own hydration drink, I don't know if Pepsi would allow them to put it in the Pepsi coolers next to Gatorade.
There's probably some clause that will prevent that.
So I'm sure Pepsi if Celsius does it, they'd obviously have to get. I'm assuming they already got the blessing from Pepsi. So now the only other reason they would do it is Celsius has been putting their own branded coolers into stores. They already have 20,000 of their own coolers. So like when I walk into my local CVS, there's a Celsius standalone branded cooler right next to the checkout aisle. And it's a big one. It's like 6 feet high. So at some point, Celsius is going to have 30, 40, 50,000 of those out there. They could theoretically have their hydration drink in those. But I mean, that's still not what you really want. I mean, Pepsi has 400 or 500,000 coolers out there. Like that's where you want your products, right? I mean, every time you walk into a grocery store, gas station, convenience store, like you see those Pepsi coolers. It's a Pepsi cooler and a Coca-Cola cooler. You know, like most people don't know this, but like the Coca-Cola, like you'll see the Coca-Cola drinks, you'll see Powerade, Body Armor, like all the beverages they either own or distribute for in the Coca-Cola cooler. And then the Pepsi cooler is Pepsi, Gatorade, Mountain Dew, Starbucks, all the products that they distribute for. So it's kind of funny how it's all broken up. Like you don't realize it until you kind of dig into the industry and find out how it all works. Those are the two behemoths. So like the Celsius story was a good one when they were with Anheuser-Busch. It became a great one with Pepsi.
Yeah, you're not hydrating with beer at the gym mid-workout, so that would have been a great. You know, I do see. I go to a local gym out here, Fit City in St. Louis, and you know, I do see. They have Celsius stocked up in the fridge amongst other, you know, energy and hydrating drinks. I'd imagine that would be a good target market for them to distribute to. You know, all the gyms have them in their refrigeration units, and you know, just kind of have them right there for, you know, you're dehydrated, you're in the middle of an intense workout. I'm going to go grab a Celsius hydrator while I'm still getting my pump in.
Yeah. Oh yeah. I mean, most gyms are selling energy drinks now. I still like, for me personally, I mean, I still prefer to buy them off Amazon, you know, where I can buy a case of 12 for $20, throw it in my refrigerator, and then, you know, you're getting it cheaper versus going to the gym and paying $3 a can probably.
Yeah, so, drinking 3 a day, that would add up a lot.
Oh yeah.
But do you guys want to talk about our workout regimen, supplements at all, or what is that? The green side.
I have a box of supplements and vitamins, but it's pretty much all like it's mostly vitamins now. I mean, the only supplements I take, I mean, I drink a lot. I mean, I eat a lot of food. I drink a lot of protein. I got back on creatine.
Okay.
But that's pretty much it. You know, I mean, I take the multivitamin. I haven't been doing BCAs as often because I just been drinking the Gatorade Zero during workouts. Like sometimes I'll switch from that though, and I'll switch over to the BCAs. I just have a hard time finding BCAs that I actually like the taste of. And sometimes they have so much artificial coloring in them that it like literally starts changing the color of my teeth. So I start bleaching my teeth to get them back to being white again. So then I kind of get away from the BCAs. The one brand I found that doesn't use artificial colors is USP Labs. So it's called Modern BCAs. They're on Amazon. The problem is my favorite flavor is pink lemonade, and they're almost always out of stock of pink lemonade. And I've tried like all the other flavors, green apple, blue raspberry. I just don't like them as much. So like until they get pink lemonade back in stock, I probably won't go back to that brand. But like I've tried all the other brands out there, and I just don't love them. But I do think BCAs are important. What's your workout regimen, or what's your supplement routine?
Oh yeah, working out. You know, I started bringing Josh into the gym once a week. He used to do the strongman competition stuff back in college, so he's teaching me. We're not really doing like the stone lifts or anything like that, but you know, he's motivating me to do bigger power lift type movements again. And so a lot of it's kind of fusing powerlifting and bodybuilding, where like today I did legs, you know, do my heavy 1 rep maxes, get that up, and then I'll do a lot of pause reps and lighter sets with that respect, really push for that volumization. And I mean, it's been working pretty well for me so far. I don't know what my body fat is right now. I think last time I checked, it was 12 to 14%. I'm sitting right at 240. So it's
How tall are
it's
you?
definitely added some mass. Huh? Oh, I'm
How
6
tall are
foot.
you? 6'4"?
6 foot flat.
Okay.
6 flat.
Oh, 6. Okay.
Yeah. So I put on a pretty decent amount of mass. I mean, there's some deficits still to build out, but it's been a lot of growth in the last couple of years, especially when implementing those power lifts.
Like when
What
I'm
about
lifting, yeah, I mean, I do the typical, like, let's say it's chest day, I'll typically do 5 different exercises, 5 or 6 sets per exercise. First set is going to be 15 to 20 reps, really just to like, get some blood in there, warm up the muscle, get the form right. And then I'll typically like pyramid down, so the second set, let's say it's 12 to 15 reps, and then, 10 to 12, 6 to 8. But like I'm at the point now where I'm typically not going to attempt any set unless I could do at least 4 or 5 reps, like good reps. Like I'm not trying to do PRs anymore because I just know I'm too likely to hurt myself. And like I've already had enough injuries. Like I don't need to, re-injure myself doing anything, or like I tore my labrum last year trying to go too heavy on bench press. So I don't want to
gotta hurt.
That. Yeah, it was only partially torn, so I was able to avoid surgery, but it took 9 or 10 months for it to like even feel partially normal again. I mean, I'm sure I could have done surgery and it would have fixed it a lot faster, but this way I was able to keep going to the gym. It just limited what I could do and how heavy I could lift until it sort of healed itself. But I don't want to get back to that again. That was not fun.
Yeah, injuries.
Yeah, it's not worth it.
Injuries will make you really rethink what your goals are. That's why I quit competing in strongman. But it's a total game changer for sure. And I know you said you only have a little bit more time. You're trying to run to the gym, right, Jonah?
Yeah.
I think we've covered a good amount of topics. And I really appreciate you taking the time.
You're welcome. Yeah, I'll come back anytime. I mean, always happy to talk about stocks and lifting. I mean, that's pretty much like 90% of my life revolves around stocks and going to the gym. So
you're amongst peers.
My 2 favorite topics.
Yeah, you're a perfect guest for this podcast, that's for sure. Well, next time we have you on, we should open up with some fitness stuff and really dive deep into that. I think it'd be a lot of fun.
Happy to go through my routine. I mean, I did the whole bulk and lean down thing backwards. Like most people are bulking in the winter and leaning down into the summer. I sort of did it the opposite way. I'm not sure why, but I was kind of bulking up through the summer. And now I got back up to 260. Now I start to lean down and I'm like, what the hell am I going to be doing? Why am I leaning down in October? This is stupid.
You're going to be freezing your ass off out there, man.
I've done the same thing. I never had to lean out for strongman, but literally repeatedly for years and years and years, I have done the same thing where I always find myself at my fittest, the leanest during the winter when I'm not going to the beach or anything. Yeah. So I know
you have to go to vacation in Florida just to show off the lean body.
Yeah, exactly. Enjoy it at all.
Well, I think what I'll probably do is over the next 60 days, I'll probably lean down to 240, maintain that for 3 months. And then in February or March, start to lean down for the summer probably and try to get on the right schedule that way.
Yeah. How tall are you?
Do you know what your lean mass is?
Right now, I don't. I mean, it's too high, whatever it is. I'm 5'10".
Okay.
So 5'10", 260 is pretty big.
You're a massive. I feel small just seeing you on the other screen, man.
Yeah.
It's not 260 of all muscle. Let's put it that way.
Yeah.
But I mean, there's definitely some muscle under there. I just got to make sure I get rid of 20 or 30 pounds so you can see it.
I mean, if you're 260, 5'10", all muscle, I mean, you're literally Mr. Olympia.
Oh yeah,
right, C-bomb, exactly. Those are his numbers. So
yeah, I'm definitely not there. I mean, those guys they probably walk on stage at what, 3% body fat, 3.5%.
Yeah, 3-4, yeah,
crazy.
Yeah.
That's a different, like those guys are using, I mean, they're literally spending $10,000 a month on PEDs and illegal drugs. Like, I don't take anything. Like, the worst thing I take is creatine.
Yeah. So. And that's not even bad. It's just creatine. I mean,
I'm joking. It's not bad enough. But people are like, oh, you're 260. You must be juicing. I'm like, dude, if I was juicing, I'd be 280 and way less fat than I am now. So
you'd be big Rami at that point.
Oh my God. If I was
huge.
Juicing, I mean, maybe I'd still be 260, but I'd be 260 and like 8% body fat. You know, my biceps would be twice as big, my legs would be twice as big. Like steroids is a very big advantage.
Oh,
have you considered a cycle at all? Or
I fantasize about it all the time.
Not at my age, it's just not worth it.
I know a lot of people, and not even lifters, you know, 40? A lot of people do TRT.
Yeah.
So TRT, so I haven't really looked into it too heavily. I've talked to a couple of guys I know that are in their 40s and 50s that did get on TRT 5 years ago, and they said it was life-changing. Like, made them feel better, got them leaner, gave them more energy, made them sleep better. Like, they said it improved every aspect of their life. It's just once you get on it, you're basically stuck on it for life. So it's like, it's a big decision. I mean, I'd like to go get tested and see what my testosterone levels are at, because I have no idea. I should find out, and maybe I'm a candidate for it. I'm just not sure.
Yeah, I have a video coming out, a clip. The podcast is already out, but I have a clip just on TRT clinics and with the research scientist that we talked to last week. Yeah. And so one of the things he was talking about is a lot of people, they'll just automatically say you need TRT when rather they should be focusing on improving their sleep and some nutrition.
Right.
And then the other bit, the real reason it's a huge, massive benefit is your body will naturally have some ups and downs and troughs in your testosterone levels. But if you're on TRT, you're just consistent all the time. You don't
is that good or bad?
I mean, it's good for you. You'll feel amazing. Your immune system will improve. You won't have periods where you're like randomly not as strong because you constantly are baseline. Your energy won't have any sort of dips as well to be completely consistent. There are some health factors with a risk in heart disease and stuff, but a lot of that is traded off if when you start taking TRT, you're more active in the gym. So it's more of like
more sleep, like, because I probably average 4.5 hours of sleep a night.
And I don't miss those days.
Yeah,
and there's bad health consequences connected with someone that only sleeps 4.5 hours a night. So if you're taking TRT, maybe it raises your chances of getting heart disease or having a heart attack or something. But if you're sleeping 6 or 7, 8 hours a night, you're probably you're decreasing your chances of having a heart attack or heart disease. So I agree. I mean, there's pros and cons to everything. I mean, it's like Ozempic, right? I mean, Ozempic's going to help you in some areas, and it's probably going to hurt you in other ones. We just don't know exactly where it's going to hurt you yet.
And you know what? That's what those analysts are missing. I can't believe they're saying Ozempic's going to cause flight, and benefit airlines, but they should be focusing on the fact that Ozempic will probably cause an increase in any stimulant sales, because as soon as you start cutting like that, your energy levels are going to massively dip. So I would imagine that would be the first correlation that some of the before going to airlines.
I know.
So what you're saying,
going for a
spike in Celsius.
Yeah.
I was joking around that it's going to help the apparel companies, because if everyone's losing 50 pounds, they have to go out and buy new clothes.
Yeah. All right. Well, I think that's a good full circle to make before we call it. I know you got to go to the gym, but really appreciate you having on, Jonah. I'm going to include, of course, some links down below for people to follow you. Is there any other place you'd like to direct them as well?
I mean, I'm very active on Twitter, so that's a good place to kind of get a feel or a taste for what I post about, what I do. But my StockTwits room is kind of my go-to service. I mean, in my StockTwits room, you get both of my portfolios, all of my daily activity, my morning newsletter, and my daily webcast. So I do a webcast every single afternoon and sort of go through both my portfolios, all of my trades, and some macro commentary. So, and I think it's like $20 a month. I mean, it's pretty cheap.
Yeah.
What's your stock tweak forum called?
It's called Finding the Growth. I probably need to change the name. I picked that name like 3 years ago. But if you just go to if you go to my Twitter profile or you go to Lupton Capital, you'll see all my links right there.
Awesome.
Okay. I just wanted to share that with the listeners so they know where to find you.
Yeah. Yep.
Awesome. All right. Well, you have a good one, Jonah. It was great talking to you, man.
Later. Bye.
See you later.
Appreciate having you, Jonah.